How to fight inflation. We will talk about it today. Tips to save money to help you not feel that full force of inflation. Over the past few months, we've continued to see that rise in a few key areas in grocery stores, at gas stations. So we will talk about that today, as well as I will be joined by my good friend Rob Roy at noon. We'll be doing some trading with him. So go ahead and smash that like if you're here already. Thank you for joining us on this beautiful Wednesday. Let's go ahead, roll that intro, get the show.
This is Benzinga Live with Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. All right, guys. So we're going to talk some tips to fight inflation. Just little things you can do to save some money. If you're paying more for your groceries than you typically would, if you're paying more for rent than you typically would, it's ever more pertinent to cut back in certain areas where you can. We'll be talking about some kind of common things that people will talk about, things that you can do to help save some money, and then maybe some more off the wall ideas as well. And then while we're going through some of these, let me know in the chat, if you guys have any favorite ways to kind of cut costs. So the first thing, because grocery store spending is something that we all pretty much do for the most part, unless you're someone that eats out virtually every meal, or maybe you have one of those, subscription food services like HelloFresh. But for the most part, most of us are spending a certain amount of our income each month at the grocery store. So really looking and analyzing at your grocery store spending, seeing kind of where your more expensive items are, where your cheaper items are, seeing if you can kind of plan some meals that may be a little bit cheaper than normal. Um, the second thing I want to talk about, toilet paper. So toilet paper is something that we all need to buy for the most part. And if you have a kid or someone and they go to school, have them throw one of the toilet rolls from the school in their backpack. Typically in public restrooms, they will have bigger toilet rolls. So, all you need is one for a while. That way you don't have to buy toilet paper. You save some money. There you go. And so, all right, we got toilet paper. That one's kind of a joke. I don't actually condone stealing toilet paper from public restrooms or having your kids do it, even worse. So yeah, Shelly, I don't know. Most of us in the US do not have bidets. We do not have bidets in the US. Oh, Born to Be Free. Shout out Berlin saying more money for me, call weeks, bail bonds when they get caught. Oh yeah, okay. So he's saying if the kids get caught stealing the toilet paper. All right, other ways you can save money. This one is real. This one is real. If you have things in your car that weigh a decent amount, take them out. You're spending more money on gas by having, for me, like I always have my golf clubs in my trunk. If I did a better job of taking my golf clubs out, and I think my golf bag's only about 25 pounds. So is it going to save me hundreds of dollars? No. But over time, as you're driving, more weight in your car requires your car to use more gas. So if you take some heavyweight items out of your car, you can actually save money at the gas pump. That is a real way to help fight that pain at the gas pump. I know you won't feel it in real time, but trust me, if you find, 30, 40, 50 pounds worth of things to take out of your car, that you will end up saving money. That's why airlines, are constantly looking at how they can make their flights, their planes lighter, and they'll save that much more money on jet fuel. Shelly's saying learn to steal gas from a random car. Yeah, we don't condone siphoning gas. Oh yeah, Nicole, great point as well. Check the tire pressure. If your car's tires are underinflated, you will be spending more for gas than you need to. So you want your car tires to be at the right inflation. You want them to be pumped up enough. And that will help save some pennies on gas as well. The other thing that's a legitimate one is find a friend. It's important to have friends in life in general. But now one of the most important reasons to have friends is if you have a good number of friends, chances are you'll be able to find one, right? You'll have one friend that is willing to lend you his or her Netflix password. Chances are you won't have one friend that will loan you all of them, right? An HBO password, a Netflix password, a Disney Plus. But if you have one friend for each, like I have my Netflix friend, I have my Disney Plus friend, I have my HBO friend. And that way, you don't have to feel too bad about it because I'm not asking one friend for access to all the platforms. But then you can go through some of your monthly subscription services and see what you're using. And see what you're not using, because I was able to cut out a few things. I think I was paying for a Disney Plus Hulu bundle and I felt like I wasn't really using it enough, so I ended up cutting it back. I also want to talk about going out to eat. So if you're going out to eat, that's one of the biggest ways you can cut back on spending is just by cooking more at home, and eating out less. But if you're going to eat out, we have some tips for you. Let's talk about Chipotle first. So if Patrick Star, you need some of those friends as well. Chipotle. If you go to Chipotle, I'll give you some great tips on how to get more bang for your buck, get more food for less. First of all, you'll get more food with a bowl than a burrito. A burrito, it's good. You get the tortilla. The tortilla has some extra calories, but we'll talk about this in a second. So if you get a bowl, you get the burrito tortilla on the side. Chipotle switched this. Now they charge for it, but they only charge about 25 cents for it. While they're doing the bowl, here's the key. You ask for extra rice. This part is free. They'll put extra rice on the bottom of the bowl. And what happens when they do this is now they will build the rest of the bowl proportionally to the amount of rice they put in. Aaron Thomas is saying that he's got some thoughts. Come over here, Aaron Thomas. They will build the rest of the bowl proportional to the amount of rice they put in. I also asked for a little bit of extra beans because beans are high in protein. And, if they throw in an extra scoop of black beans, that's just more food for free. Again, they don't charge for extra rice or extra beans. Now, when you get to the protein part of the meal, this is key. You ask for chicken first. They start to scoop they put once they put a full scoop of chicken in, you say, wait, actually, can I do half steak, half chicken? They're going to say, oh, you want double meat? Say, no, I want half steak, half chicken. Here's where you catch them because they've already given you pretty much, if not a full portion of chicken. And then this Chipotle worker will look at you and be like, all right, I'm not really supposed to do this, but fine, I'll throw in some steak in there too. So now you get more than a full portion of meat for the same price. You've got an extra rice, you've got an extra beans. And now when they go to put your salsa and cheese and lettuce on there, your bottom of the bowl is bigger. They're going to need more of that stuff to match the rest of the bowl.
All right. Sure. Yes, I agree with your method.
Okay.
But the true key at Chipotle,
okay,
is you go up, you get your ingredients. Yes, the bowl, you get more food with the bowl.
Okay, so we're in agreement here.
You ask for the tortilla afterwards if you want the burrito. Learn a new skill, learn how to wrap a burrito, right? Solid. But the true key is whenever you get your bowl, whenever they scoop something into the bowl. Oh, is my mic not on? Check.
Like at the bottom or whatever.
Easy Mike. I didn't say siphon gas. That was someone in the comments. I would never say that. I would never do that. Gregu, no, I did not kill my account today. My account's actually doing well today. I'll share that real quick. And we can talk about Chipotle's stock as well. Let me know in the chat what stocks y'all are watching, what trades you guys are making. I closed some positions this morning, but haven't really been active since then. So I could be talked into making some trades at some point.
Okay, but as I was saying, so when you get your bowl, right, you get more food out of the bowl. Yes, you're right. So whenever they scoop the ingredients onto the bowl, you have to you need to ask them, hey, can I just get a little bit more?
Every single ingredient?
Every single ingredient. I promise you'll stack your bowl. Your bowl will feel like it's 5 pounds. Hey, can I just get a little bit more beans?
Yeah, but then I feel like you're just annoying if you do that.
Sure, whatever. They see you one time. They see like a million.
Is that real? The size of the bowl has gotten smaller at Chipotle?
No, it hasn't. I don't think so.
Yeah, portfolio's up
an
about
atrocity.
$350 today. I had some Tesla puts that I sold this morning. I don't really have any open positions. How's Tesla doing now? Okay, it's coming back a little bit. All right, so those were my Chipotle hacks. If you're eating out at an actual restaurant, where you're being waited on. So I served tables in college. I know kind of what I was doing to try to upsell tables to get their bill higher, so that in the end my tip was higher. And here are the biggest things. So soft drinks and drinks in general. If you are really trying to cut back, I would recommend not going out to eat at all. But if you're in a position where you have to go out with, family or friends and you're at a restaurant, I would bypass all drinks, alcoholic and sodas. Because if you get a Coke, even if you think you're saving money and by not getting a beer, the beer is going to be $6. The Coke's going to be $3. You're still way overpaying $3 for a glass of Coke. So just get the water. Salads before the meals. This was one that people don't think about a lot, but was one of the biggest things that I was trying to upsell tables on. Because if I had a table of 4 and people were all about to order an entree for dinner, and you got one person to order, a side Caesar salad before their meal comes out, then everyone at the table is gonna do it as well because they think it sounds good. They don't want this person to get their salad before, and then they'll have nothing. So that is another way. Just cut out the side salads, and then obviously desserts as well. And then when the bill comes, you just
run out the door.
You just don't tip.
But you feel so shitty after that.
No, I'm kidding. I would never not tip. I waited tables. Don't do that.
Yeah,
but
don't tip your waiter. If you can't afford to tip, don't go out to eat. That's
true.
I mean, that's just like the number one rule.
True. Never date a lush, AB. I don't know what that means.
Lush. Someone luscious?
Someone luscious? Tiny Pie says you have to learn how to fight raccoons before you go dumpster diving. True. We haven't gotten into the dumpster diving ways to save money. The other thing that I would say you can do is look at your investments. See, like right now is a time where if you are racking up credit card debt and you need more money to pay down your credit card, maybe you lower your contributions. That you're a lush, someone who drinks a lot of booze. A horrible piece of advice?
Yeah, I don't know.
No, I'm saying if you have like more credit card debt right now, like a lot of people, credit's at like an all-time high. I'm saying that it makes sense sometimes to tone down your monthly contributions to your investment account if you need some of that cash to pay down your credit card debt. Oh, that's also a good idea. Tiny Pie saying, what about instead of AAB on the streets, we send him to a dumpster to see what treasures he can find? Rohan, make a note of that. That's a decent idea. I would need like a hazmat suit. I think trash is gross.
Have you ever dumpster dived at a GameStop?
Have I ever dumpster dived at a GameStop? No.
Yeah, they're like, that's probably one of the best places to dumpster dive because they just throw out like all their old stuff, old games, and like accessories and like toys and stuff. Like I've seen a lot of YouTube videos of people just dumpster diving at GameStops, and they come away with a haul.
I've never dumpster dived in general, let alone at a GameStop.
Not even as a kid? Never?
I mean, I would play like in the recycling bins outside of like I grew up literally like right across the street from the high school I went to. So
okay.
They have these like big recycling bins outside, and those were fun to play in because it was just a bunch of boxes. But the actual trash part, gross.
I guess so. True.
So while we're talking about ways to fight inflation, what's interesting, I was on Bloomberg, our competitors, this morning, and there are some things actually
I need to get back to work
that are doing the opposite of inflation, actually coming down in prices. So we're going to talk about some of these goods where the prices have been coming down. I'm curious in the chat, throw out some guesses as to which ones of these goods you think they are, and then I'll pull up the article and we'll go through them together. Again, these are goods that while everything else is rising, these goods are actually falling. So let's see. I'll give you all a few minutes to throw some guesses in the chat. We'll see who gets one right. And while I'm doing this, I'm going to pull up my Benzinga Pro and we'll just do a quick run through of all the major indices, what we're doing right now. Graphics cards. Yep. Night for Humanity. You got one that's on there. Adam, I think lumber is on there as well. What was the question? I was getting tea. Shelly, what kind of tea you drinking today? The question was, we are going to be looking at goods in which prices are falling. So while everything else is raising, all the other prices are rising, these goods prices are actually falling. So we'll take a look at these. Adam saying Lambos must be down, maybe. All right. Let's go to our tab. Let's check in on the SPY. The S&P 500 is very, very flat today, down 0.02%. Let's keep going. Let's keep ticking through. Let's take a look at the Qs, up about 0.2%. So pretty flat day for the SPY and Qs so far. I mean, not flat in the terms of what the Qs have been doing. We dropped down a lot right at the open, ripped higher, gave up some of those gains, came back. Again, it's just been a roller coaster, just up and down, seesawing around, and now we are essentially flat. The Dow Industrial Average is up about 0.3%. So wow, interesting to see SPY actually be your laggard today. Jonathan is saying avocados, cars. Hexbony asking if I still Wordle. I do. I still love to play Wordle. I just don't do it every day. For a while, I was doing it every single day. I think I had a streak of like 35 days in a row of getting it right, and then I missed it one day, and then I just kind of ruined it for me. My new thing has been well, I don't even know if they have a desktop version of it. Let's see. Oh, I think they do. Oh, maybe not. Play online. All right. Remind me what my new kind of Wordle game is, the thing that I've been doing in a few minutes, and we'll do that. But I want to get to this real quick. These are the goods that have been rising. The prices have been falling, while all the other prices have been falling. One that I did not see guessed in the chat, Rolexes. That's the first one on the list. Rolex watches. According to watchcharts.com, the price of a Rolex, as well as other luxury watches, have been sliding steadily since April. What does that tell us? That tells us that people in essentially the highest, or that want to appear to be in the highest tax bracket, the wealthiest, people on Wall Street, investment bankers that want to buy nice watches and flex, buy Rolexes, have been buying less of these since April. So now for about 2.5 months, you can see the price of the average Rolex was right here above $15,500, and has since come down to about $14,500. So Rolex, yep, Adam, Lambo is close to Rolex. I don't see Lambos on this list, but I'd assume that Lambos. Graphics cards, I think Knights for Humanity guessed this in the chat. One of the hardest to find consumer products over the last few years has been graphics cards, graphics chips for computer gamers, in part because of the general chip crunch, but also due to demand by some crypto miners. So you had a multitude of things going on. You had the supply chain issues brought on by COVID that made it harder to produce these semiconductors. And what we learned during COVID is that these semiconductors are not just in computers and electronics like that. They're in everything now, cars. And it's not just, you need one in your car to, no, the little device that moves your seat up, back and forth, that needs a semiconductor. So we learned that during COVID, that during the supply chain crunch, it made these chips harder to produce. And then you also had an increase in demand from gamers. You had an increase in demand from crypto miners, because as the price of Bitcoin mined, that created more people wanting to mine Bitcoin. They need to go out and buy these cards. And so it created this crunch. And that's why, if you look at NVIDIA or AMD stock, you can see really why it took off, because there was such high demand for these products that they were having a hard time producing. Jonathan Lovelace saying, so would that mean that anything that takes a semiconductor to build should see a price drop as well? So yes and no. So if you take something like cars, where that was the main thing holding these car companies from producing more cars back was the lack of semiconductors, then yes, then more semiconductors should allow them to produce more cars, should allow those prices to come down. But not every little thing that has semiconductors into it, the semiconductors were the main holdup. There have been a bunch of other supply chain issues as well. So if something, just because something takes or needs a semiconductor, I wouldn't think that means that the prices will have to come down here. I think most things, yes. Cars especially, yes. So next on the list, we've got industrial metals. Copper, tin, and other industrial metals have been getting torched. In fact, they have just had their worst quarter since 2008. Concerns about global economic growth, particularly out of China, have been hammering this space. So you can see this is the Bloomberg Industrial Metals Sub-Index, was up at $240 in between February and March. Looks like early March. And in the past 3 or 4 months or so, we've seen that come all the way down to 162. So 240 to 162, that's about a 33% drawdown. Terrible quarter for industrial metals. But what's good news for us is that should mean that the cost of production for a lot of things should come down, as the price for a lot of these commodities is coming down as well. Next on the list, Bored Apes, NFTs. If buying a JPEG of a bored looking ape is how you flex your wealth in this new world, and the value of that flex has gone down a lot, you can now buy one for just around $100,000, whereas the lowest price, the floor price, was around $400,000 just a few months ago, according to CoinGecko. Here's a chart of that price floor for Bored Ape. So you can see that right here. In April, it was around 400,000. That was just about 2.5 months ago. It has come down more than 75%, down to below $100,000 at one point. So Bored Apes and NFTs in general, one of the things getting cheaper out there. I don't know how interesting that is to a lot of investors out there at this point. Trucking. There's been a lot of freight recession for a while, with lower truck rates foreshadowing recent weakness in retailing and consumer goods. The basic cost of a mile of trucking has been tumbling all year after an incredible boom since the middle of 2020. So this is good news and bad news. And on the good news front is that the cost of shipping was one thing helping drive prices across the board higher. Lower costs for shipping should translate to lower prices for certain goods across the board. The bad news here is you could infer from this chart that at least in part of the drop in price for trucking has been a drop in demand. A drop in demand for trucking would mean just an overall slowdown in the economy, whereas when there's more trucking, more goods being shipped, that's a good sign for the economy. It's why something like FedEx or UPS's earnings can be viewed as kind of a proxy for how the overall economy is doing, right? If FedEx reports a blowout quarter, that means more companies and more individuals were shipping goods throughout that quarter. It's good for the economy. So seeing a drop in demand for trucking is not a good sign, but this price drop can be from a number of different things and not just a drop in demand. Yeezys. Even prices of Kanye West branded Adidas shoes have been slowly drifting lower. On StockX, the price of a bone-colored Yeezy Boost 350 V2 was around $276 at the end of March. Today, it's around $240. I guess basically here, as long as you aren't buying Yeezys or nice shoes as an inflation hedge, you should be good. I think this is probably the same thing as with Rolexes, just people that maybe we're looking at buying Yeezys or buying Rolexes have not been doing so as much over the past few weeks. Shipping rates, basically the same as trucking. This is instead of trucking, though, we're talking about shipping on a container ship from Shanghai to LA. So this is one that we've talked about a lot just over the past year or so. We've talked about these different maritime shipping companies. We've looked at DRI, I believe is DRI an ETF that tracks, or no, that's Darden. What's help me out. Okay, Zim, I know, was one that we were looking at. Zim Integrated Shipping Services. This stock has been crazy. It got all the way up to 86. It's come down to 47, down 45% from its highs back in March, just a few months ago. Dustin saying, to save money, I'm on an all-air diet. Just imagine eating good food. Yeah, I wouldn't recommend that. I'd like you guys to stay healthy. I like you guys. I want you guys to stay healthy, especially healthy enough to keep back and keep watching my show and giving me likes and subscriptions when I ask. All right, so after shipping, we've got used cars. I saw this in the chat. Someone guessed this one. Higher prices for used cars have also been a big driver of higher inflation in the U.S. That's in these months where we've looked at when the CPI is like 8. When you dig in and look at what goods are driving that price is higher, especially a few months ago, one of the main things was the price of used cars and trucks. And that was in part because of that semiconductor shortage that we were talking about. Because if Ford and GM are unable to produce the amount of new cars they were supposed to, that's going to drive the value of used cars higher because there are less new cars available. While used vehicle prices remain elevated compared to the pre-pandemic period, they did basically stall this month, according to the Manheim Used Vehicle Value Index. So you can see just the crazy run on this chart that used vehicles has had throughout the COVID pandemic. And now it looks like on the chart that we've had that some kind of topping out, that we're at least stalling, and that maybe used cars will not be not continue to get more expensive. Crypto, the only saying, bro, food is number one. If there was more food education, this world would be so much better. I agree. I think, and especially here in the US, I think we waste more food than pretty much any other country in the world. So if you're looking at food waste, those are definitely areas where you can cut back, kind of save money on inflation. And I know the grocery store right now is one of the areas, in addition to the gas pump, where people are feeling the most inflation pain. So really looking at your grocery store habit spending, and especially if you're eating out multiple times a week, and especially if you're getting food delivered through like DoorDash or Uber Eats, it's just so expensive. So those should really be your first place to look if you are trying to cut corners, save some money for inflation. All right, so used cars coming down. Some houses, overall house price measures are going up, and there still seems to be an expectation that we won't get an overall decline thanks to overall tight inventory. But there's definitely a pickup in sellers slashing their asking prices. According to Redfin, the number of listings that have seen a recent price cut is shooting up. So you can see here, this is just the percentage of price drops is on this red bar is 2022. These other two lines, the gray one and the blue one, are the two previous years, 2020 and 2021. So way more price drops on Redfin for houses at this point in the year than in years past. So while housing is still expensive, and that's actually can be a good thing and a bad thing. So as you see more and more things on Twitter and people kind of doom and gloom saying that it's the end of the world and we're going to see another 07, 08 recession, you really have to look at what led to that and what we have now. And I don't think there's really the potential for a huge housing market crash in 2022 because, like this Bloomberg article is stating here, there's still to overall tight inventory. There's still a housing shortage in the United States. It'd be hard to imagine a housing crash while there is also a shortage. And then kind of this also goes into lower housing prices. Lumber. The housing boom meant that lumber was one of the first things to see a sharp squeeze in price after the pandemic, at one point becoming the world's best performing commodity. But lumber prices have since peaked and troughed a couple times as construction slows and sawmills ramped up some supply. And that's just supply and demand working out as it should in economics, right? The price of lumber shot up. So what are the people producing lumber going to do? What are the sawmills going to do? They are going to rush to produce more because now they have more incentive to produce more wood. And then as the supply increases, the price falls, thus lowering the demand to produce more. So it's just how these things play out in cyclical natures. I think when lumber was up here, some people thought, oh my God, lumber is really going to stay this expensive forever. But I think a lot of economists knew, all right, these are acute factors playing into this move, not something that is going to equate in lumber being elevated forever. So there you have it. There's our list of goods that are dropping in value while other goods are rising. Again, we'll run through those real quick. You have Rolex watches, graphics cards, industrial metals, Bored Ape NFTs, trucking rates, Yeezys, shipping rates, used cars, some houses, and lumber. So basically, I hope that some of these goods where things are coming down, or at least where inflation is slowing down, is enough to offset any areas where prices are still rising. Let's check right here on our handy dandy AAA gas prices. So national gas average is $4.86. Compare that to a week ago, $4.95. Gas has actually come down a little bit in the last week. Not enough to get excited about. I'm not excited about it yet, but if we continue to see that trend, that's good news. That's good news for the economy because that means that people are spending less money at the gas pump. They have more money to spend in other areas at stores like Walmart and Target, or on goods, or on Apple products. So again, nothing to be excited about yet. Trust me, $4.86 gas is not something I'm happy about either. But if we continue to see that trend where 1 week ago it was more expensive than it is today, that's good news. All right, let's go ahead and get our first guest on of the day. Let me go ahead and get my headphones on. We've got Mr. Robert Roy from Wealth Builders HQ going to join us. We're going to run through some charts, see what Rob's been looking at. So without further ado, let's give Rob our special intro and get him on the show. Mr. Roy, how you doing today?
Good afternoon, Aaron. How are you? I am outstanding.
Great. I love to hear it. What have you been trading this week?
So it's been an interesting week, to say the least, right? I mean, if we just look at SPX, right? And I'm sure you guys have seen this at least once or twice today on your show alone. It's been interesting, right? This great run to the upside. We ran into a good confluence right here at that 3,000-ish level. And then it's been 3 days in a row that have been failed, with yesterday being the ping pong trade between the two Fibonacci levels. Broke a little bit lower, but great setups yesterday. So the focus had been on this breakout right here. Let me grab a highlight there. So on this breakout here, on this closing day, which was Friday, the thought was, all right, are we going to retest and bounce? So we got the retest on Monday, and then Tuesday just became decimation. It got stopped out on a couple of things yesterday early. And here, my SPY and Qs did extremely well yesterday. Qs actually did better this week, Aaron, than SPY did for me. It was a great pivot point trade on Qs. And yesterday, well, actually, was it yesterday we took it? Let me see.
Yeah, sorry, Rob. Can we get your screen shared real quick? We don't have that pulled up yet.
Oh, goodness gracious. My bad.
All good.
Okay.
There we go.
Now back to what I was saying. This move up, right, on Friday, we were looking at, are we going to get a retest and a bounce on this 3906 level, this confluence with the 21 moving average and the fib, as well as the 3900 level, the 100-point level. We closed Monday right there. We pulled back a little bit on the open, ran up, nice head fake. That's where I got stopped out a little bit there. We picked up some great trades there yesterday as well. So one of them that we're still in, this was on the 28th we entered, which was booking. Right? And every once in a while, you get a great setup without even asking for it, right? So we got the trade on the 27th on booking. We got in the trade, and it's easy to pull it over. Let me keep turning my neck. We get in the trade while the stock was at 1916. That's where the entry was. We did 4 contracts. So anything over $1,000 we consider aggressive, and we only do a max of 4. Many of my students just trade 1, but we do 4 contracts. So at 1916, our first target was down here at 1782. We did, after yesterday, put a stop in place on this just in case. We had a stop at 1845, which we, of course, today's high was 1833. So we never got back up into that to take us out of our puts. We gapped down and ran into that 1782. We take a $5 break off of that. So 1787 is the exit there. And that's only on our first 2 contracts. We're talking about $1,916 down to 1786, call it, to make it easy math. Was that 130 points, 140 point move on the first 2 contracts? We have 2 left still at this point. So on booking, fantastic, right? That exit, as I said, just came earlier today. So I couldn't be more excited about it. Worked out well. So that was the only one that I had open overnight. And the funny thing is, Aaron, we're not holding overnight. Everything we're doing lately has been day trades. We're putting 1 and 2 companies out there on a regular basis that, okay, let's look at this one as a potential directional trade where we're willing to hold overnight for the home run. We're not doing any of them bullish. It's only bearish, because the last 2 Amazon trades that we did overnight, we got stopped out by holding on to them, and it cost us about 34 grand. Had we just closed them out as day trades, they would have been over $50,000 in profit. So not worth the bullish runs trying to hold overnight. Better off to just, for right now, better off to do it with a bearish candidate, because when we get to oops, then a nice little pop, and those fails, we get to take advantage of it. So it's the only one we've had overnight for a while.
And those were just puts on booking?
Correct. It was just puts on booking. That's all it was just a directional trade. One of the things, and I could show you, I can bring up an older sheet and share it with you. Let me see. So one of the things that we do, and I'm just going to grab an older one, right? So you can see we put out targets for these 20 stocks, and guys, you're welcome to copy them down. I never hide what they are. They're all yours, right? We put a bias to each of them: bullish, bearish, neutral, easy. And then bullish, neutral, bearish, neutral. Each one tells us how we're going to handle the position. And we set bullish and bearish targets. And the stock may be bearish. So if you look at Facebook at the time, this is before shifting over to Meta, it was bearish, right? Well, if it goes down, 181, 172 are our targets. But what if today is a bullish day and I want to try to take advantage of Meta, or Facebook? 195 and 200 were our bullish targets. And then you can see it just said we're going to do a day trade here. Adobe was the only one that was any different. We had earnings on Adobe, right? If you look, this was earnings here. So on Netflix, bearish below 173, aggressive, right? On Google, bearish with a pullback to the 8, aggressive, right? So each of these is just a call for us to take a directional trade, Aaron, using just calls and puts, straight calls and puts. And every one this is my trading plan. I print this out, and this is what I look at the next day. And then my bias over here helps me to understand where overall the market is, right? The market's bearish here. So the only thing we had bullish at all was Alibaba at that point. Can I take Alibaba? You could, but you've heard me say it before, 70 to 80% of all stocks move in the direction of the S&P 500. So if the market's going down today, the S&P is going down today, and if you just focus on the bearish trades, you've got a better chance of being right in the overall position.
Interesting. So even if Baba's showing strength in a weak market, you don't think it's strong enough to essentially stay green while the market's red?
Could be, right, because of that. Sympathy is the wrong word, but just, all right, I give up. Everybody else is going down. I guess I'm supposed to as well.
Right.
Now, if the market's been, I'm sorry, Aaron, go ahead.
I was just going to say, oftentimes the stocks that even are showing strength while the markets are down, it doesn't mean they're up. It just means they're down less than the overall market.
Correct. S&P's down 2, 3, 4 days in a row. And today we get a pop on the S&P. I have no problem taking a Baba trade. Absolutely none. And even though Goldman Sachs showed bearish, if the market's shooting up today and Goldman Sachs is in the right position, and time again when I've been on your show, Aaron, I've talked about how we look for that right position and that bounce we look for. If we can find that perfect entry. And when I say perfect, wrong word. There is no perfect entry. We're looking for a clear and concise entry. Clear path to our target without any resistance in there. I don't want a roadblock. I don't want a speed bump. I don't want to have a detour. I just want a clear path to my target. If I can get a clear path, then that's okay for me. Concise is taking the entry at the right point. For me, a breakout, a gap up, as an example, isn't the right entry. That's Rob. Doesn't mean it's wrong. I don't trade breakouts. I trade retest and bounce. I'm all about getting on base a lot, and every once in a while we hit a home run. Booking is a home run, not what we expect normally out of a trade. But I'll take it, but I wasn't planning on it.
I hear that. So right now, have you been looking at any stocks that have caught your interest as a potential trade today, or have you been sitting on your hands?
Nope. Tesla was the only one. I looked at SPY and Qs. And guys, if I can get you to do anything from this, it's start focusing on pivot points, right? They are an absolutely phenomenal series of indicators. Did not work well today, but a phenomenal indicator. Actually, this is my pre-market one. Let's get the post-market. All right, let's do it here. Right? So what we're looking at is these major lines. The yellow line, just don't focus on the dotted lines right now. Those are midpoints. All they do is split these two levels in half. This yellow, which is PP, and the green, which is R1, it just splits it in half. Right? I'm looking for a bounce off of a support or resistance. Well, we moved down today on the pivot. Right? We moved down on the open. We popped back up. Really can't follow it that way. And we got into the midpoints. We broke down. We got a pop. I wasn't looking. I just wasn't trusting that we're looking at any directional market today because we've been flat, up 10, down 10. I mean, we're not really moving a whole lot on the S&P 500 today. Not the 80, 90, 100-point days we're used to seeing. And all day long, what's happened, right? Some of y'all are in the medical field. What do they call it when the line just goes sideways? What is that called? Dead, right? Dead.
Flatline, yeah.
Dead. Dead works. Guys, there's nothing going on. So I couldn't find anything in SPY or in the Qs to determine, I want to take this trade. We got a breakout. I just wasn't trusting this bounce. It would have worked because the midpoints are my exit of my first half of my target, but I didn't take anything on SPYs and Qs. You'll find 2, 3, 4 days a week, you'll find trades utilizing this method. But for today, Aaron, we had Tesla come out and they announced they were closing that plant down or that office down, right, and laying 200 people off. And we had a gap down in pre-market and we watched it. And this 683.38 is a key Fibonacci level for Tesla. If we look on a daily chart right here, 683.38. So we closed up here yesterday, right up at this point where my crosshairs are. We gap down. Well, it doesn't give me much. I am in position 1 in the chair this morning on Tesla, which is back here. I'm not doing anything. I can't reach the keyboard, right? I'm watching from a further away view. Up here is too dangerous for me. I could go, oops, I placed a trade, right? I don't want to do it. I wasn't ready for it. I'm watching for the break of that 683.38 level. And we step it down into the intraday time frame, and that came on the very first candle. But I don't take the breakout. I wait for the retest. So we fail. We come back up, and we drop right off of here. It wasn't a huge drop if you look at the closing price. But remember, that wick brought us all the way down. The low of the day of that candle was 679.60. So we're talking about $4-ish off of that level. Right, so that was the entry into a put. We bought the 700 puts this morning, which have had amazing open interest and volume on them today. On the volume on the 700 puts are 11,000. The open interest is 7,000. Open interest was as of yesterday's close. How many people had an open contract in their hand? Buy to open or sell to open? Open position. Today, almost 12,000 contracts have traded hand. So could that mean that the open interest goes lower or higher? Yes, it will adjust that, but not until the day is over. Open interest is a stagnant number throughout the course of the day. Right? So we took the trade there. And of course, immediately I take some heat, but we had a great confluence of our 8 moving average and our fib line, that 683 level. And I'm watching. We got a candle above. The next one started to push down, and then we finally failed. Had we broken the 21, we would have been out of the trade. We broke down. We came back. We just went flat. We took our next leg down. We pushed up and we closed up above here. Now we're at 1140. The lunchtime lulls. I'm not a fan of trading in there. So I pulled the trigger on the trade and we got out there. So not a bad entry. We got in at 10 o'clock we got out on the 1135 candle, which was on this candle towards the end of it, right? 1140 candle towards the end of it. That's 35. It's actually 1136 to 1140 is what that candle is. And did about $7 move on Tesla. So overall, nice setup today on Tesla. And it came off of news, the news trades that I call out every morning. It was the only one there actually were two of them that were on my list that we trade regularly, which is Tesla and Goldman. But Goldman's up, but not on a day where we're trading down. I didn't want to trade that upgrade from Bank of America this morning. So I decided to pass on it.
Yeah, I actually had some Tesla puts going into today as well. Nice.
If you had them going into the day, you did much better than I did.
Yeah, I forget the percentage, but they did well. It wasn't like a huge position. I had one 650 put that expired this Friday, but I think I bought them for like I bought one for 250 a contract, sold it for like 750 today.
Yeah, the 650 right now is at $8.50.
Oh man, I should have held on to it.
Yeah. Never be okay. So here's something to always keep in mind, right? I love this when I teach live trainings, right? Because you get to look in everybody's eyes, the students, you see what they're thinking and what they're saying right there instead of just reading comments. You'll see people all the time. We'll talk about a trade and you had a trade that you got into and it went against you and it dropped $1 and you decided to get out of the trade and then it kept going down and you're like, yes, excellent. I got out before it was too late. And then you get in a trade like a Tesla as an example, and it went in your direction and you made money. And later on you look at it and you could have made more money. Like, oh man, I could have made more if I held on. So you're upset when you made money and you're happy when you lost money. Take the focus, right? Be happy that you got out at the right place. It's not what did that cost me? Lose should never be in your vocabulary. What did it cost me? And was that what I was willing to spend? Listen, if you go out for dinner and you spend $300, then you better have been willing to spend $300 on dinner. If not, you're in the wrong restaurant, right? If your goal is to make $5 and you made your 5 and it goes to 10, so what? You got your profit, your risk profile, what you were comfortable with. That's what's important. Too many traders, the Reddits of the world type traders that are chasing the GameStop stuff and those types of things. Listen, can you be on the right side? Yes, I was twice. I was on the right side of that trade where I did extremely well. But I can't count on that as a steady diet. That's like eating chocolate all day long. It just ain't good for you. Well, maybe
100%. Yeah, and I'm not really upset that I sold the Tesla. I mean, it was lucky that I had the Tesla puts anyway, but I'm saying that it's just funny, seeing that, oh my God, I was happy I sold them for 750. Now they're 850. I would have made next year. I
agree, but I do the same thing. I'm just using it as an example for anybody that's trading, right? Myself included, to make sure we know what our focus is, right? Get on base a lot, right? Think about it, Aaron. What's the difference of a batter in baseball that bats 280 and then another batter that bats 330? What's the difference in there? And I don't mean the 50 points. What's the difference between those two players?
The guy that bats 280 is good. The guy that bats 330 is an MVP candidate.
Right. So the guy that bats 330 gets an extra 0 in his paycheck and makes it to the Hall of Fame, right? You don't need that much more to be a great trader, right? And they're not normally the Hank Aarons of the world, the Dave Kingmans of the world, the home run hitters. It's not normally who that 330 batter is. It's the guy that consistently can get on base. If I can get on base, I got a real good chance of living in this game a long time. If you're chasing after that home run, you got a real good chance of getting your account blown up and may or may not come back again.
100%. Although I do think Hank Aaron did also have a pretty good batting average.
He did. Dave Kingman was also known as the strikeout king.
Really? I didn't know that.
Runs, but 3 out of 4 times he swung dang batties. Well, I don't know if it was that much, but he was striking out a lot. Strikeout king. Yep.
All right, let's see. Let's see in the chat real quick if we've got any other tickers we want to check out. Quantum's talking about UNH, United
Healthcare. That's one of them that lives on our daily list, right? So United Healthcare, I'm a big fan of them. I think they do a great job as a company. Right? We had a nice pullback here on the fib. We broke through our 0 line, came back strong right? After that dividend paid out, we've got earnings to contend with. So we're day trading this only, nothing overnight. If it's to the left of that blue line, that E, we do not hold it overnight. We only day trade it. We gap down today here. The real simple question is, I'm going to write a number down, 509.89. That's the fib line, right? If we look at it intraday today, how did we do on that line? So let's change this to 509.89 and see if it respected that line or did it blow right through it. And I'm not saying you can't take the breakout. I hope everybody understands that. This is how Rob trades. You still trade how you trade, right? So look at this, Aaron. We got this breakout right in here and we closed above. See this here? Head fake. The wick broke its head above and came right back down. Right?
Wow.
So many traders are stopped out there and missed the real trade, right? We broke out and we closed above. What it says is traders are comfortable at that point. When we pulled back and bounced off that 509.89 level, and of course we'd be looking at a shorter time frame, the 1 minute. But if we got the right bounce off of there, guys, look at the move that it's made. It's outstanding. So as far as an entry today, if you took it there, great. As far as where it goes, 518.97 is the next place I see it stopping, and it did so yesterday. And that is a major Fibonacci level. It's the 618. That's why it's purple. It's a different color than every other line. I've got red lines, black lines, blue lines. This is the only purple line on my fibs. That is a key level where we expect a pullback, right? And if we do get what we call an H pattern, that 500 is about where we look for it to pull back to. Now, if we break out of 518.97, we'll take the breakout. I'll take the retest and the bounce. Then 530 is our target. See, guys, I'm not drawing all of these lines. You know what I drew? I drew the top two lines. I drew from here, that one, down to here, the 0. All I did was draw these blue lines. And if you look, every other line is automatic. I get a whole series of lines just by drawing two. Finding a V top, great V top here back in April, and a V bottom in early May. All right, so look for that 519 level as your next target, 510 as your support.
Yeah, I mean, I think I like how the Fibonacci lines are so defined. It's like you said, you draw the two lines, the rest are automatic. They're all mathematical. They come in where they're going to be, and it works for you.
It does. It does. And guys, on our Trading Like a Boss website, which I'm sure you guys will drop the link at some point, there's a free training on fibs in there. If you're interested, by all means, take advantage of it. It's about an hour long. It's a 3-part series. Gives you a chance to go practice a little bit and then come back to the next part the day after.
Yep, I just got that link in there. Go check that out. Trading Like a Boss. Let me make sure. Okay, yeah, you can see the comments. All right, Rob, well, do you have any other stocks you want to talk about, want to check out today, or should we leave it at this and then we'll be back next week?
Got a couple more if you want to look.
All right, let's do it.
You got a moment. I can blow.
Yeah, we got a moment.
Okay, so look where
we have time.
What's that, Aaron?
I said we have time. Take your time.
Excellent. Yeah, I got, you're talking cars today. We're going car shopping today for my daughter. So for her first new car. So that'll be an interesting experience for sure.
Her first new car?
Her first new car. She's only had one other. She's 25. Okay. So this is her first new car today. So we're looking at what's going to be taking place as far as cost goes and so forth. How expensive are they going to be? So we had this breakout and close yesterday below this fib line, the 369.58. Today we came back, retested it, and dropped. Guys, I'm looking at a move. If we get a continuation on this, you're looking at 341 is your downside support. So about 343, 342, 343 would be my target on this. And my stop is going to be on this somewhere about 374. Okay, on Adobe. So that's one. Chipotle, Mexican grill, higher price stock. You got to be careful on their options. They're not always very liquid. You have a confluence of the 8 moving average, the pink line, the 21 moving average, the green line, and that 1296.79 level, all right there. Same scenario. If we continue that push down, 1231 is the target, is support. So we're looking at about 1237 as our target for getting out, right? Which gives you a tremendous amount of room. Right, so that's 2, Aaron. NVIDIA, a little bit lower price stock. Look at the breakout today. this is not the first day we've broken below this 155.67 level. We broke and we came back. We broke and we came back. We broke and we came back. So I can't take anything on this today. It's impossible for me. I can't do it. It would, for me, my trading would be a mistake. So what I'm looking for is tomorrow, can we get a retest of that level? Right? Can we stay down here somewhere, come back and retest NVIDIA and fail? If so, right about 139 is going to be my target, and right about 158.59 is going to be my stop. About 25% of the distance of these two lines is what we're looking at.
So you'd be looking for a move to downside down to that 140 about level.
Correct. Stocks in this price range were normally $1 off of a fib level. So 137.5, so right about 138, somewhere around there is where my target would be for this. But if you got in at 154 and got out at 140, you will not be disappointed in yourself.
And then would you just find puts around that strike price? Would you go lower than that strike price? Would you go like 142? What would be your process there?
Good question. So if we go to NVIDIA, right, and let me bring the option chain over, right? So it would be a day trade. So I'd be looking today. I'm looking at puts. I am looking for puts that have a delta of 65 to 85. That's the key. That's the key. Oh, but Rob, you can trade less delta and double the number of contracts you trade, and it gives you the same delta. In other words, if I have a 70 delta, instead of buying one contract, I could buy two contracts of a 35 delta. Yeah, if you're right. If you're not, the time value deterioration is going to slap you silly because of your percentage of chance of being right with that contract. So for me, I go strictly with what I'm looking at. 68 delta, and this is why we're doing it right now, Aaron, right? I've got an open interest of 2,600. Look at the volume today, 3,400 volume today. And we're looking at only 585. Good bid-ask spread, only 10 cents. That's the contract I would trade. Could I trade the 78 and the 80? Well, not 87, but the 78, I could, but I don't want to. I'm going to trade the between 65 and 85 delta, closest to 65, because what I spend versus what I will make is not worth it. I can go buy one more contract. If I was going to buy 10 of each, right, $5,900, call it $6,000 versus $8,000, right? Between the 157 halves and the 160s. So it's $2,000 difference. I can go out and buy another 4 contracts of this and buy 14 of the 157 halves, and I will crush the movement of the 78 delta. There's no sense in putting more money at risk in the trade than I need to. So that would be the one I would choose, Aaron, is the 157 halves.
Got it. So you don't have a set price, a set strike price you would get based on the fib. You go to the option chain and just look at that, and then base it off of essentially what would be your risk and reward on the options chain.
Correct. And then making the decision of, okay, am I all right with a $6 investment into this position? If the answer is yes, now look at what your potential profit is and look at what your potential risk is in the trade. I'm willing to risk $3 with the potential to make 10. All right. Well, $10 move with a 70 delta is a $7 move in your favor. $3 move against you with a 70 delta is about $2. So you're willing to make $7, or you're looking to potentially make $7, and you're risking $2, right? If that risk reward fits for you, then you take that trade. But if you look at this and it's $87 for the option on Tesla, you know, because it's a Monday and it's in the money and it's, you know, high vols on the position, then you may look at that and go, yeah, maybe the perfect setup, but I got to sleep at night and that ain't gonna let me sleep. Don't do the trade.
Yeah, I like that. That makes sense. All right, what's next on the list after NVIDIA?
SPY. I mean, how can we not look at it? Look at that setup, guys. We pushed up, broke our head above the trees, said, yeah, it was fun, but we're going to leave. Came back down, and here's our 8 moving average. We're looking at 367.5 as support. Plenty of intraday trade setups in there. But if you're thinking we're bearish, especially with the Fed and all that good stuff, then, and you're looking for directional, I'd be looking at about 369 would be my target here to the downside.
About 10 more bucks from where we're at right now. I do see Quantum in the chat saying SPY aggressive sell-off. It looks like we've had a little in the last 30 minutes or so since you've been on the show, Rob, a little 0.5% move to the downside
Nice.
on the S&P. So let's see if we can get down to that level. You know, I like that. My whole time during this bear market, I've been looking at the 3,500 level for SPY, thinking that's kind of would be what could be the bottom potentially. So I still think we have a little ways to fall to get down to there, maybe another 8 or 9% or so. But I don't know. I think usually these cycles take some time to play out.
Absolutely. You know, the big lump, you said 35 on the SPY?
Yeah, or 33. Some people say 33. I like 35 first. If we break through there, then we'll look at the 33 level.
33.8250 is the next major Fibonacci level we're looking at.
Okay.
Write it down, guys. Most people are not talking about this.
Wait, can we get it one more time? I'll put it in the chat.
That was it. Sorry, not saying it again. Sure, it's 33.8250. There's 3 levels.
82.50.
Right. There's 3 levels. Aaron, this one, the 41.81, we have crushed it off of that level multiple times this year. We have done so well using that level as a ceiling, a floor. It has done amazing for us. The next one is down here, this other black line, which is 25.84. They're both Fibonacci numbers. Go into a Fibonacci number series. They're both Fibonacci numbers. All this 33.82 half is the midpoint of these two.
Okay.
It's kind of the resting point, Aaron, where people are going to go, woo, okay, let's regroup. Where are we at? And then you're going to see traders trying to determine, is this the place to take the bounce or the break or not? And for most, they have no idea these lines exist. And what I mean by that is most traders aren't focused on Fibonacci at all. But whether you realize you're focused on them or not, you are. Because you're going to see that stocks tend to stop in the middle of nowhere, and you scratch your head going, why did it stop there? And then you apply some fib numbers to it or logic to it, some indicators, and you go, well, of course, it's right there. It respected it to the letter. And that 41.81, if we look right here, we got what I call a dreaded box of neutrality on the S&P. Right? We kept bumping our head up at that 41.81 day after day after day before finally we gave way. Right? And it doesn't mean it's a definitive of we can't break it. It's going to hold every time. That's not the case. You'll get your breakthroughs, right? But that 33.80 is really where I'm looking at as the next major level. 3,500 is good. It's a whole number, right? I use 100-point levels. That's all of these dot dash lines that we have here. But there's a lot of opportunity still with the market to the downside. I don't think we're anywhere near done. We don't know what's going to happen with Russia, gas prices, inflation, midterm elections, government. Are they doing anything or not? You know, that's really going to help us. Don't know. Baby formula shortage. There's so many things happening. And what did China come out now today and said something about they have a no COVID policy for the next 7 years or something like that? 100%.
Yeah, I don't know. I mean, I've seen different things. I've seen that for a lot of, it seems like Shanghai over the past couple of weeks has been more opened up, but yeah, they're sticking by that zero COVID policy.
Yeah, but they now went out multiple years that they're talking about doing it for. I don't see how they make that work. But I just don't. I see so much negativity on to the downside that I don't know where the recovery comes in. You know, we talk about could midterm elections change things, if some seats change, possibly, but we're still looking at 8+%. If you can believe that number is real, I don't, of inflation. I think it's much higher than that. Just look at gas and food and anything else you're buying. How do you get 8%? You know, I don't see it. But if with that alone, gas, people are feeling it. This weekend is the major test with gas prices because of it being 4th of July and how many people are going to travel.
Right. And I traveled last weekend and it was busy. Like it didn't look like a recession was going on. The planes were packed. People were out spending money. Restaurants had waits. I mean, it was like funny looking around saying, do these people not know we're supposed to be in a recession?
Look how high our credit card debt is right now.
I know. It's insane. It's the highest it's ever been.
Yeah, it's just crazy what we're going through. We've paid a lot off from where it was and so forth, but we're still not in a good place at all. And that's the problem is I can't afford it. So put it on credit, put it on credit, put it on credit, put it on credit. And listen, I get it. I've been there where I had to do that. Guys, when I learned how to trade the market, the education that I bought, I had to put on 2 different credit cards. And there wasn't enough money on either one of them to really make it work. I kind of borrowed from other credit cards to keep paying them off, just floating it back and forth until I was finally able to pay it. Right. So I know what it is to go through that type of stuff. Right. I've had lived it for a very long time. But people are in for a rude awakening if businesses start pulling back, like a Tesla who said we're going to cut jobs. Right. And they start pulling back and less money coming in and less jobs available. The government's only going to be able to help so much. Learn how to trade, folks. This can be your savior. The potential is here. We teach people to do it every single day, how to trade the market. You can learn it. It's not hard. I'm not saying it's easy, but it is not brain surgery that is required for you to be able to do this. Just pick a strategy that fits your risk profile.
Call Me Today is asking about TLT. Have you checked out the bond markets at all?
No. Don't really focus on it. Let's see, 20-year bonds. Yeah, not really my forte. I'm very focused because bonds just don't pay anything. So very focused on the equity side of it, but bonds are not really me. So sorry, I can't really give you much on that. From a technical standpoint, it's still in a bearish neutral bias.
Got it. All right, Rob. Well, unless you got any other stocks, we'll leave it at that today. Always love getting you on. We'll have you on next week. I've got that link in the chat, tradinglikeaboss.com. I saw Hidden Mahdi asking for it. So go check that out. Like Rob said, there's some free education on that site as well as some more resources available. Rob, hope you have a great rest of your Wednesday and stay green.
Appreciate it, Aaron. Good deal. Yeah, guys, Total Market Control is on here. That's a free training. You want to control the market? I'm going to show it to you in this training right here. It's coming up next week. So have a great one and enjoy the 4th. Be safe.
You as well. Have a great holiday. We'll see you next week.
All right. Take care, everybody. Bye for now.
Bye for now. All right, guys, that was Rob Roy from Wealth Builders HQ. Go ahead and hit that link in the chat, tradinglikeaboss.com. All right, guys, we've got about 23 minutes left. I think I'm going to have my other Aaron friend join me up on stream for a little bit. We also have some... Oh, wow. Interesting. Let's check out some other things that I was seeing. Oh, Hexpony. I think it was Hexpony. Hexpony saying Bitcoin just dropped below 20,000. We'll do another quick check in on Bitcoin. Let me get my Benzinga Pro pulled up. And then I was going to show you guys because I think Hexpony was asking about Wordle. And I said I've been playing kind of a new game instead of Wordle. And I was going to show you guys that just because it's I've been trying to I've been kind of nerdy recently. I'll be honest.
No, we haven't played in a while though.
I'll be honest with you guys. What's that?
The trivia.
Oh, we haven't. Well, I'll talk to Rohan. We'll help, or not Rohan, Enver. We'll get that set up for tomorrow. So Bitcoin, it just dropped below 20,000, but we've come back since then. We're now back above 20,000. So good news for all you Bitcoiners out there, for you cool cats and kittens that like Bitcoin. Back above 20,000 for the time being. We are at $20,025. So we'll keep our eye on that throughout the day because that $20,000 level, I mean, it's I don't know how big of a technical level it is in reality, but from a psychological standpoint, it seems like a lot of people are clinging to this. All right. So my new game, my new thing I've been doing instead of Wordle is this. I have the app on my phone. I never played it online. I didn't even know I could, but it's just this Cetera app. I guess it's owned or run by GeoGuessr, which is, GeoGuessr, right?
Yeah.
So GeoGuessr is the one where it'll just give you a random Google Maps thing, and you just got to like pick where you think you are. This is different. This is just giving me a map of Africa, and then I have to click on all the countries. So I literally didn't know where, like when I started playing this one, I knew where Madagascar was, which it's having me click on right now, South Africa, and Egypt. Those were like the only 3 countries I know. And now I can do like the whole thing. I know where every single country in Africa is. It's pretty cool. Just from playing this game a little bit. So I'm gonna try.
Kind of cool. I don't even know all the countries in Africa except the 3 that you said.
I'm gonna try to do this with all of the different continents. So then that way I know.
Just gonna be a man of the world.
Where all the countries are in general. Yeah. So if someone thinks they can beat my time on this, and you also You have to get 100% or else your time doesn't count. That's the way I play, at least.
Okay.
Senegal, Somalia, Algeria, Egypt, Seychelles, Gabon, Tanzania, Eritrea, South Africa, Mozambique, Kenya, South Sudan, Lesotho is this little country in the middle of South Africa, Republic of the Congo, Guinea-Bissau, Ethiopia, Ghana, Estonia, Djibouti. Djibouti is my favorite. Cameroon, Rwanda, Morocco. This is the other little country in South Africa. Burundi, Ivory Coast, Liberia, Angola, Togo, Zambia, Benin, Comoros. You get these little islands. There we go. 100% in a minute 46. That's all 55 African countries in a minute 46.
It's quite impressive, actually. But like, how many times did you play before you wanted to show this off to us?
I didn't even want to. I wasn't planning on showing it off to you guys. Someone was asking me about Wordle, and I said, no, I haven't been playing Wordle. But you know what I have been playing is this. It took me about a day of, not a full day of playing the app, but like I played the app for like an hour on my phone, and I knew all the countries. And then it took me a while to trim my.
You did say that it is an app, so okay, you can just play that passively.
So I'll show you on the. So I started on the app, the Cetera app. I started a new game just because I felt like I had mastered the Africa one.
Mm-hmm.
I started the U.S. state capitals, and here you can look at this is like my real time learning curve right there. Like the first time I did it, I think I got like 54% in like 5 minutes, and that was just naming the U.S. capitals. Then after like 6 times, I knew where all them were at.
Okay. Yeah, no, this is quite the improvement.
Yeah. You can see it in real time, like how many times it takes. So for Africa, it took me a little bit longer because like with the U.S. capitals, it's like, okay, I know. All right, now I remember Columbia is the capital of South Carolina, you know, whereas like the first time I did it, I didn't know that. But then when I did it again, I remembered it.
All right. I kind of want to see what's going on .com.
On Benzinga.com?
Yeah,
you pull up Benzinga.com. I was going to pull up this tweet. So I've been looking for a while. I've started my position in renewable energy. I've been a fan of Sunrun for a while. But this is a chart that I saw on Twitter today. This is from Mike Munsell, who is a dad of 2. He does sponsorships at Canary Media Inc. and is the author of its Friday social column covering the climate and the internet. He's previously at Green Tech Media and Forrester. He's in the Boston-ish area, according to his Twitter profile. So anyway, offshore wind installations surged 3-fold last year. China leads the world in new installations, but the U.S. is just starting to ramp up development, according to a new report. So here we have China in orange, Europe in yellow, and then rest of world in this little purpley color. So the US is included in this little tip at the top. And as you can see, this is offshore wind installations. Just in the year 2020, I mean, we went from less than 7,000 new installations to over 21,000. And I see this chart and I just think to myself, okay, obviously companies and governments are putting investments into this space, into offshore wind. How can I invest in this? How can I get my hands into this? Yeah, Jay Rice, I did see that.
Wait. Time on.
What?
How do you run out of wind?
I think they ran out of their like energy they were producing with wind, not the actual wind. Thus, coal. Yeah, I mean, coal's been on a frickin' tear. We've talked about Peabody Energy, BTU, a lot on this show. But I have a couple different wind plays after looking at this. And this was something that I just, this tweet came out at 9 a.m. this morning. So this was about, a little more than 3 hours ago. I've looked into it a little bit. I haven't looked into it enough, so I'm not going out and buying either of these stocks, but I've been doing a little bit of due diligence on them. Let's go back to my handy dandy Benzinga Pro, and we can look at these different companies that are in the wind space. Yeah, and actually that's why. So I talked about this on the show a few months ago. Just the different position that different European countries are in based on their energy policies. Germany voted years and years and years ago, like 20 years ago, to phase out all of its nuclear energy. Not most of it. Not okay. We're not going to develop new nuclear plants. No, we are going to phase out all of the nuclear energy plants that we have. France took a completely opposite direction, decided to invest a lot into its nuclear energy. And now France is the largest energy exporter in Europe. France is producing so much energy through its nuclear plants that it's able to export some of that energy to European countries surrounding France. They don't have to worry about as much the fact that Russia oil, whereas Germany, because they don't have the same nuclear infrastructure, is much more dependent on Russia exports and oil. All right. We're still looking at Bitcoin here, $20,000, $15. Let me give you my two wind plays. The first one is Ørsted, and these are both off. I think they're both ADRs. They're both not U.S. companies. So Danish company Ørsted was named Dong Energy. Do you know that, AT? It was named Dong Energy until the sale of all its oil and gas fields to Ineos in 2017. Soon after the May 2016 initial public offering, Ørsted is now focused on renewable assets, especially offshore wind farms. It operated 7.6 GW of offshore wind farms at the end of 2020. The UK is the biggest country of operation, ahead of Germany and Denmark. The group intends to develop its footprint outside of Europe with projects in Taiwan and in the US. Ørsted is also involved in a more traditional utilities business like conventional power plants with gas supply, but these activities are non-core. Ørsted intends to phase out coal by 2023. So essentially, if everyone is building these new offshore wind plants, I'm interested in the companies that are going to be building them. Ørsted seems to be one of those companies. Like I said, I kind of just started looking into this. I haven't done enough DD, but I like what I've seen so far from Ørsted. The other one is Vestas Wind Systems. Vestas is a leading manufacturing of wind turbines and with the highest installed capacity under service in the world. The firm operates two business segments, Power Solutions and Services. The Power Solutions segment designs, manufactures, and installs onshore and offshore wind turbines. The Services segment performs operating and maintenance service work on the wind turbine. The U.S. accounted for approximately 20%, 19, but I'll say 20% of its revenue in 2021. So Vestas and Ørsted, I'll throw these in the chat. Again, I'm not saying, oh my God, everyone go out and buy these. I'm not even saying I'm going to go out and buy these because I don't know if I am. But I saw that stat with how many new wind turbines, offshore wind facilities are being built. And I wanted to know what are going to be the companies behind them. From what I can tell so far, Vestas and Ørsted are your two kind of winners and biggest players in the space. If anyone's got any renewable names, any wind names that they love in the chat, let me know. Because I'm all ears. I'm looking to make more investments in the space. I've made some good money trading the oil and gas stocks, trading Peabody, but I don't think now is the time to be buying these coal stocks. I don't think now is the time. Right. Let's look at a chart of Peabody. Let's look at its weekly chart. And you can see, just this incredible run we've been on since April 2021. I don't want to buy something that's already made its move from $3 to 23. I've already missed out on this. Can it keep going higher from here all the way back to its previous highs in 2018 of $47? Sure. Of course it can. But I'd rather look at some of these names instead, like Array, that are in names that I want to hold long term that have been beaten down already. Right. Let's just look at the TAN Solar ETF. I mean, down at 4.7% today. I think in the short term, we're seeing that that all of these countries, the U.S. included, do not have enough infrastructure and renewable energy. We are still reliant on oil and gas, reliant on coal. But I expect that to change over time. I don't think that's going to be the same case in 10 years that we're talking about, that we don't have enough energy produced through solar, through wind to meet our needs. I think that will change over time, and I want to be invested in those other companies. you know, so if you're bullish oil and gas here, you can look at a ETF like this, Gush, your leveraged oil and gas bull fund. As you can see, it's gotten beaten up. It's gone from 260 down to 137. So basically cut in half in the last month or so, less than a month. This was June 8th. This was at $256. It's now June 29th and it is at 136. You can look at Drip is the opposite of that. Yeah, I mean, Drip has been on an incredible run, gone from, I think at one point was like, no, I thought it was below $10. No, about $13 all the way up to 23. So let's see. Jay Rice in the chat saying China, India have wiped out 7 years of CO2 reductions with their coal. Yeah, I mean, I need to catch up on my Slack. I don't. Oh.
I mean, it's true, right? So, like, guys, I feel really awkward being up here just because
What's Silverstone?
Silverstone, British GP this weekend.
The F1?
Yeah, I'm just sitting up here. I'm quiet because I don't know how to talk about financial content. I like listening to AB. I learn a lot.
Ooh,
I just can't contribute.
You want to talk about F1?
No. You were clearly on a train of thought, so I want you to finish that.
My train of thought is essentially short term. Yes, renewable energy is not there. There will probably still be more pain in the short term in these solar names, in these wind names, which would mean that some of these coal and oil and gas names can still do well in the short term. But I think long term, if I had to choose an industry in energy that I had to buy today and not sell for 10 years, I had to hold it for 10 years. I'd rather it be on the renewable side than the oil and gas side, because that's where more and more investments are going into, both from a government and private standpoint. Companies, even the oil and gas companies themselves are spending their own assets in renewable spaces, because they know, oh, if I'm the CEO of Chevron and I want to double down on oil and gas and not put any efforts into renewables, Chevron might be extinct in 10 years or 15 years. It's the same with car companies that have said they aren't going to, produce any electric cars. They're going to stick just to gas cars. Okay, that's great. If you want to do that, that's fine. But if the consumer changes in 10 years and people only want to buy electric cars, you might be shit out of luck.
I don't think that'll ever happen, though. We're never gonna be like a fully electric.
No, but I think like Dodge. I think Dodge said we're never gonna make an electric pickup truck. Like, we are going to stick to our roots, like all gas, whatever. And then they saw the demand for like Ford and Chevy's electric pickup trucks, and they walked that back. They were like,
money will change anybody's.
Might consider. And exactly. It's like, there will always be people that will want to buy a gas car, an ICE combustion engine over an electric car. But that doesn't mean that the overall consumer, what's going to make the most sense for these companies. And I think the same goes for the energy companies like Chevron. Like, there will always probably still be a need for oil and gas companies. But if Chevron wants to use its millions and millions of dollars of resources to explore some renewables, then it might put itself in a better position 10, 15, 20 years down the line. Tiny Pie wants to talk about Charles and Charlotte. You know, he has a girlfriend named Charlotte.
Really?
Yeah.
That's
kind of weird, right? It'd be like if I had a girlfriend named Aaron.
Aaron. I talked to a girl back in college. Her name was Aaron, so it was kind of awkward. But
you talked, like, you like saw her on campus and said hi?
No. We were like,
in item
talking.
You going steady?
I wasn't. We weren't going steady.
You weren't going steady.
Yeah. Someone say
hey guys,
F1. Yeah.
Can you hear me?
Mm-hmm.
Yeah.
I can hear you through one of my ears.
Yeah, one of them, like on the left ear, I heard you.
Yeah, same.
Like through the mic?
No.
Yeah. Oh, like right here.
It's only through the left ear.
Oh, well, no. Yeah, this is like my talkback system, but everyone can hear me right now. Just try a new mic. But that's weird that it's only in one ear.
Well, it only works on the left side, so maybe try talking in the
talk.
Right.
Test.
Yeah, one ear.
Interesting.
Did you really need to do that to know that it wasn't?
Listen, that's how you test. You confirm.
I know, but we both said we can only hear you through one ear. So
Okay, but that was like a definitive test, right?
all right, you're right. You're
Okay.
right. Now you
Cool,
know.
cool, cool. Now we know.
Now we know.
Okay, yes.
Tiny, but I don't really have any thoughts. Like you called it months ago that
Yeah,
Ferrari
it's-
was going to ruin Charles' season. That has been what's happened. Charles is still the best driver on tour.
Yeah,
He just gets fucked by his own team.
I mean, he proved that with the last race. He started what, P18. He came up all the way to P5.
Yeah, you tried doing that, Tiny Pie. I doubt you could.
And there's the matter of he's just an absolute G at qualifying too. I don't think anyone
Yeah.
can do better than him in qualifying, to be honest.
And he's just a cool dude. Good looking, rich.
Wait, did my mic just no?
Nice.
Very good. Okay, let's see how much time we got left on the show. 4 minutes. 4 minutes.
When is Tiny Pie gonna be on the show? He'll come on soon, Shelly. Don't
Wait,
worry.
let's give our predictions for
Oh, okay.
the
Here we go,
podium.
here we go.
All right, I'll go Charles, Verstappen 2, and then Sainz 3. I think Ferrari's gonna have 2 people on the podium.
Really?
Yeah.
Okay.
Interesting. Yeah, I mean, Ferrari, obviously, they have their upgrades from the last race. If they're reliable, they're definitely competitive. But Red Bull also just
You
brought
guys aren't
major.
throwing no Mercedes in that mix
Yeah, so that's
after the last race.
yeah. Well, here's the thing: is Mercedes is going to be close behind. I think they might be in the pack, but the thing is, they benefited from Carlos Sainz DNF in the last race. Or no,
Sure.
sorry, not DNF, but he started at the back of the pack. No, sorry. Leclerc started at the back of the pack, and Sainz had a DNF. Did he? I don't remember.
Yeah,
but
he did.
so yes, they did great, but they were still technically behind Ferrari before that.
Well, let's see. I mean, it is the home race of both Mercedes drivers, right?
Yeah.
So let's see. Mercedes is really going to show out today or this weekend. I really think so. I mean, they just have to. They want to get back into the running for the drivers' championship, and so
No, I think it's
constructors.
They're definitely looking to do that. The audience is definitely going to want that.
Yeah.
I think that realistically, though, we're going to see a really good performance from Verstappen, probably from Perez too, definitely from Leclerc. You know, it's always a little bit up in the air with Sainz. Obviously, he had a great last
Okay,
race.
Tiny Pie is saying Verstappen, Sainz, Russell.
Oh, I thought he was saying Russia.
Yeah, I'm kind of in that boat. I might say Verstappen, Leclerc, and then Russell or Hamilton.
Yeah, I mean, I would
Who does Russell race for again?
Mercedes. But I mean, he's the most consistent driver on the grid right now.
He's for sure going to be in the top 5. That's for sure.
Yeah.
Every race this year. Holy crap.
When are we gonna go karting?
We tried to go last
we tried to
weekend.
go yeah. Picked up some AMD calls in the 76 handle. I feel like that's way oversold off that news.
What was the
that's
new-
an
what
that's
was
an
the
AB.
news?
That's an AB.
I don't even know what the news was.
Oh.
Why AMD shares are diving today?
I mean, yeah, I agree with you, Tiny Pie. It's the Verstappen payback year, but it's also kind of the Verstappen like, the championship wasn't given to me last year, right?
Oh yeah, he has to like prove himself.
He kind of
again.
has to prove. Yeah, he has to prove himself again.
Wait,
for sure.
he overtook Hamilton in the last race, right?
But it was Michael. This is not right, Michael.
What do you mean?
No, it's dude.
He won because of a technicality that was like not even a good
The
technicality.
race director unlapped the 4 cars between Verstappen and Hamilton,
and
at the
Verstappen
safety
had
car.
fresher tires.
And unlapped him right after he came out of pit. So it was like he had the advantage.
Okay.
There was, like,
and
no
then
way-
The race director just
So it was a
gave
Mickey
him the
Mouse
advantage.
title, is what you're saying?
Yeah,
Yeah.
yeah.
All right, Mickey Mouse title for Verstappen. Heard it here first.
Mercedes won the constructors through and through.
All right,
Well-
guys.
well
Just
deserved.
to recap what we talked about on the show today, tips to save money to fight inflation at home. Have your kids take toilet paper home from their school so you don't have to buy any. Don't tip when you go out to eat.
Chipotle bowl, whenever they scoop an ingredient on your bowl,
Yeah, just ask for extra.
just ask for a little extra. All you have to be really nice about
Ask
it,
for a
right?
water cup, fill it up with soda. You don't have to pay for soda that way.
Yep.
Take heavy things out of your cars. You will not have to pay as much in gas. This one's real. If you take heavy things out of
Yeah,
your
just take the
car.
back seats out, everything.
Take the back seats. Yeah,
rip the
take-
entire
reduce
inner
the
shell
weight.
out.
Yeah.
If you don't have a family or anything, take all the seats out of your car except for the driver's seat. You will save so much money on gas. Other things we talked about.
Dumpster
were
diving.
Different stocks. Go back, rewind. Oh, look, we can see Rohan now. Go back and rewind. Watch Rob Roy. Had a great combo there. Otherwise, stay tuned for Money Mitch. Money Mitch will be starting here in about
Now.
0 minutes. We will be talking about Money Mitch. Will be talking to Jay Woods, the New York Stock Exchange executive floor governor, and as well as Jay Hatfield, the founder and CEO of Infrastructure Capital Advisors. So should be a fun show. This stream will automatically redirect you there. Stay tuned for Money Mitch. Love you guys. We'll be back tomorrow, 11:30 a.m. Eastern, for another episode of Benzinga Live. Please smash the like if you haven't already. Stay green. Stay solvent. And
We have trivia tomorrow.
we have trivia tomorrow.
Very nice.